I do that. Okay, so I've done that now. Once again, just a reminder, please turn off your webcam and mute your microphone if you have not done so. Thank you. Okay, so welcome to the first of two Robert Tomorrow webinars. On number one will be today, the support for business measures. And tomorrow at the same time, 11:30 a.m, we'll be looking at the support for individuals and households and available financing options measures. Please note that, as I said before, we are recording the webinar today. I would advise everyone once again to mute their microphones and turn off your webcams at this point. I'm wanting a really interactive session, but we do have a lot to get through. So the procedure I will use is to pause at the end of every topic and ask if there are any questions. I have Karina Waite from our Strategic Tax and Estate Planning team, or STEP, who will monitor any questions you have put onto the chat box, and we'll attempt to answer your questions as we move along. In addition, please feel to ask questions. As there are so many complexities and uncertainties with these new measures, we may need to get back to you in the coming days if further research is required. So I'll now be turning my camera off, and I'd like to draw your attention to the ATO Treasury notes that I'm now going to share to my screen. Once again, if you could just let me know through the chat box if you can see that once I do that. So just give me 1 second, I'll share that now. Okay, so I've just done that. Just let me know again through the chat box when you can see that. Okay, fantastic. All right. So yeah, these are going to form the main bulk of what we're going to speak about today. Just 1 second, just got a bit of technical difficulty here, just 1 moment. Okay, that's better. All right. Please note what I'll go through today is just a general summary, and it's not to be taken as legal or tax advice. And before acting on any of this information, please obtain proper professional advice. Also note that the ATO Treasury document I am using today is located on the Robert Tomorrow website blog under the COVID-19. All right, so what we'll do now is start the presentation. Please follow along with me with these ATO Treasury documents, and I'll take you through all the main facts and some really good detailed worked examples on each component of the support for business measures. Okay, so we're going to start today with the JobKeeper payment. Okay, so this one was announced only this week, and probably the one that's most recently hot off the press. So a lot of people are trying to get their head around this. Just reading through some of this here, the government's introducing a subsidy program to businesses affected by coronavirus to cover the costs of their employees' wages so that more employees can retain their job and continue to earn an income. Keeping Australians in work and business and businesses in business will lay the foundation for a stronger economic recovery once the coronavirus crisis passes. Okay, so just some notes on this. These payments are aimed at the current employees of businesses that fit the eligibility criteria I'm about to go through, as at 1st of March 2020. And when we're looking at individuals who are not employed, okay, the relevant areas.
I think that's the way to go, really.
Sorry, Sam, I think you need to mute your mic there, mate. It is Sam. I can hear you through the speaker. Just wait for Sam to mute his microphone. Okay. So while the payments from Centrelink are now focused on individuals who are not employed, okay, and meet the criteria for those particular payments. All right. So we're looking at current employees, which includes employees that have been stood down recently as well. So we'll go through that. So just down to this section here, under the JobKeeper payment, businesses significantly impacted by the coronavirus outbreak will be able to access a subsidy from the government to continue paying their employees. This assistance will help businesses to keep people in their jobs and restart when the crisis is over. And for employees, this means they can keep their job and earn an income, even if their hours have been cut. Okay, so I'm just going to move that down.
He does it.
Okay, so you can see here the JobKeeper scheme is open to businesses impacted by the coronavirus and is available to the self-employed as well. Okay, so we're talking about sole traders here, and I'll go through an example shortly that explains how it works for a sole trader. Government's going to provide $1,500 per fortnight per employee for up to 6 months. Okay, so note the 6-month maximum period that it can be paid from is between the 30th of March 2020 and goes to the 30th of September 2020 at most. So I've just added that in. It's not in the notes there. The JobKeeper payment will support employers to maintain their connection to their employees, and these connections will enable businesses to reactivate their operations quickly without having to rehire staff when the crisis is over. So now the all-important eligibility. Sorry, we'll just go up there. So just this section here. So employers, which includes not-for-profits, will be eligible for the subsidy if their business has a turnover of less than $1 billion and their turnover will be reduced by more than 30% relative to a comparable period a year ago. Okay, and that period's got to be at least 1 month. This second bit is about businesses with a turnover over 1 billion. I'm going to assume there's not too many people here would fit that category. So they've got to approve 50% reduction. And the business is not subject to the major bank levies. So I looked that up, and what that is, we're talking about the big four banks, ANZ, CBA, NAB, and Westpac, and also the Macquarie Bank. So those employers are not allowed to gain access to these particular measures. Okay, this paragraph here, employers must elect to participate in the scheme, and they'll need to make an application to the Australian Taxation Office, providing all the supporting information, and they've got to demonstrate that there's been a downturn in their business. In addition, employers must report the number of eligible employees employed by the business on a monthly basis. Okay, so my notes here, as at 31st of March 20, the ATO has an online form already on its website that you can complete just to register your interest as an employer or a sole trader. The laws will most likely be given royal assent or approved, come into effect probably sometime next week. Okay, so you must remember these particular measures have not become law as yet. So we're going to see more and more detail, more applications, et cetera, as that becomes law in the following days, even into next week. Down here, eligible employers will receive the payment for each eligible employee that was on their books on 1st of March 20. Okay, so that's a key date, 1st of March 20, and continues to be engaged by that employer. And this includes full-time, part-time, long-term casuals, and stood-down employees. All right, so when we're talking about casuals, there's a further proviso here. Casual employees eligible for the JobKeeper payment are those employees who have been with their employer on a regular basis for at least the previous 12 months, as at 1st of March 20. So my notes here on this, any casuals not fitting this criteria will need to apply for unemployment benefits under the measures for job seeker. Okay, so that's a big thing you've got to be aware of. They've got to be with that business for 12 months prior to the 1st of March 20 if they're a casual employee. Okay, going further, to be eligible, an employee must be an Australian citizen, holder of a permanent visa, protected special category visa holder, a non-protected special category visa holder who's been residing continually in Australia for 10 years, or a special category subclass 444 visa holder. So, but essentially my notes again, what this is, a New Zealand citizen living and working or studying in Australia. And the big concern with this visa provisions is that approximately 1.7 million people in Australia are here on short-term visas, and they're missing out on these measures. So a big concern in that area. All right, so we just head over the page here now. All right, so now we're talking about our eligible employers, some more information. So eligible employers who have stood down. Now, stood down, what this actually means is these employees, they're still on the books with the business, but they're not being paid currently, as currently they cannot be usefully employed through no fault of the employer. Okay, so if you want to look any further into what stood down means, you can go to the Fair Work website and have a look there. So yeah, we've got people, they're still on the books, but they've been stood down. And this relates to their employees before the commencement of this scheme, and they will be able to participate. Okay, so stood down employees will be able to participate if they were employed prior to the 1st of March 20. Employees that are re-engaged by a business that was their employer on 1 March 20 will also be eligible. Okay, so I'm going to go through some examples that are going to really highlight what this all means. In circumstances where an employer is accessing support through Services Australia, okay, what we're saying here is they're getting, say, unemployment benefits through JobSeeker. Because they've been stood down or had their hours reduced, and the employer will be eligible for the JobKeeper payment, the employer will need to advise Services Australia of their new income. Okay, so my notes on this one. If this $1,500 payment makes them ineligible for unemployment benefits, then they will only get the $1,500 JobKeeper payment. And I can tell you that in most situations that will be the case. It will be more than the allowable income that they can earn to get unemployment benefits. Okay, self-employed individuals, they'll be eligible to receive the JobKeeper payment where they've suffered or expect to suffer a 30% decline in turnover. Okay, so it's the same rules as what we went through before, relative to a comparable prior period of at least 1 month. Okay, so it's no different to what we went through before. This is our sole traders. Where employees have multiple employers. Okay, so we might have doing some a second job, third job, doing some casual work, for example. Only one employer will be eligible to receive the payment. The employee will need to notify their primary employer to claim the JobSeeker payment on their behalf. The claiming of the tax-free threshold will in most cases be sufficient notification that an employer is the employee's primary employer. So again, my examples coming up will really clarify what this all means. Okay, so we're getting to the examples, getting closer. So the payment processing, eligible employers will be paid $1,500 per fortnight per eligible employee. Eligible employers will receive at a minimum, or I think someone's just unmuted their mic there, if they could just mute their microphone. Eligible employers will receive at a minimum $1,500 per fortnight before tax. Okay. That in most cases would actually relate, if you annualize this figure, to being about $39,000 a year. So in most cases, PAYG withholding is going to have to be taken out of that $1,500. And I'll come to more practicalities with that in a moment. And employers are able to top up the payment. Okay. Once again, the examples will show this scenario. Where employers participate in the scheme, their employees will receive this payment as follows. Okay, so this is really critical to understand these 4 bullet points. If an employee ordinarily receives $1,500 or more in income per fortnight before tax, okay, so gross, continue to receive their regular income according to their prevailing workplace arrangements. Okay, so no changes basically for these employees who earn more than $1,500 a fortnight already. The JobKeeper payment will assist their employee to continue operating by subsidising all or part of the income of their employees. Second category, if an employee ordinarily receives less than $1,500 in income per fortnight before tax, their employer must pay their employee at a minimum $1,500 per fortnight before tax. Okay, so we're trying to make it a universal thing here that every employee eligible here is getting at least $1,500 per fortnight period. Third area, if an employee has been stood down, okay, as I said before, stood down is they're still on the books, but there's just nothing they can do at the moment, so they're not being paid. Their employer must pay their employee at a minimum $1,500 per. And finally, if an employee was employed on 1 March 20, subsequently ceased employment with their employer, and then has been re-engaged by the same eligible employer, the employee will receive at a minimum $1,500 per fortnight before tax. Okay, so they've been terminated prior to 1 March 20, and then these new JobKeeper measures have come back in, so they can be re-engaged once again, these employees, and then they will be eligible to get that $1,500 per fortnight from that employer. So this is really good. It'd be up to the employer if they want to pay superannuation on any additional wage paid because of the JobKeeper payment. Okay, so I guess when we're talking practicalities here with single touch payroll, for those not aware, single touch payroll is the new system where we pay our employees. So all the big accounting systems, MyOb, Xero, etc., use single touch payroll. I think what's going to happen is that we'll probably get a update to these systems where we'll probably get a couple of new payroll categories. And I would say there'd be one for job seeker with SGC and one for job seeker without SGC. So that's how I think the practicalities will work there. But there's still a lot to come in terms of information on this sort of thing. Big one here, payments will be made to the employer monthly in arrears by the ATO. Okay, so in other words, the ATO will pay employers in the month following the employee's entitlement to the amount. All right, timing. This is the last little theory, I guess, on this before we go into the examples. The subsidy will start on the 30th of March 20, okay, so a couple of days ago, with first payments to be received by employers in the first week of May. So there's that in arrears payment. Businesses will be able to register their interest in participating in the payment from the 30th of March 20 on the ATO website. Okay, so I have been on the ATO website and that is definitely there. You just put your name down, phone number, email address, all the contact details, and the ATO will be in touch with you regularly to tell you how the laws are progressing and when it's actually being given royal assent, and then they will continually update you with all the practicalities that you need to go through. So big tip is to go onto the ATO website, search ATO website JobKeeper, and you'll find that link to register your interest. Note also with this that if a business is in a position to do so, they can distribute the JobKeeper payment immediately and will be reimbursed from the 1st of May. Again here, I found that the payments will be taxable like normal wages to the employees, and they'll be taxable to employers to the extent that they don't pass on any of the $1,500 payments. For example, the relevant employee already receives more than $1,500 per fortnight. So in that case, the employer can just hold on to that $1,500 to subsidise the ongoing running of their business. All right, so let's get into these examples now, which are really going to cement all that theory there that we've just been bombarded with. So first of all, I'm going to go through a self-employed or sole trader example. So Melissa's a sole trader running a florist. She does not have any employees. Melissa's business has been in operation for several years, and the economic downturn due to the coronavirus has adversely affected her business. She expects her business turnover will fall by more than 30% compared to a typical month in 2019. Okay, so, for example, here you might bring up a profit and loss for March 2020 and compare it to what it might have been in March 2019, just to show that your business's turnover has dropped by 30%. There's going to be a variety of ways that you can prove this. She'll be able to apply for the JobKeeper payment and would receive $1,500 per fortnight before tax, paid on a monthly basis. Okay, so that's our sole traders. Now we've got an example with a worker who has multiple jobs. So we've got Michelle currently works 2 permanent part-time jobs at an art gallery during weekdays and a local cafe on the weekend. Due to the impact of the coronavirus, the gallery is closed and Michelle has been stood down without pay under the Fair Work Act. Michelle continues to work at the cafe delivering takeaway orders under those rules that we have. Michelle can only receive the JobKeeper payment once, so it's a big one. You can only get it once from one employer, from the employer from whom she nominates as her primary employer. As Michelle only claims the tax-free threshold from her job at the art gallery, this will be treated as her nomination of the art gallery as her primary employer. The art gallery is eligible for the JobKeeper payment. The art gallery will pass the JobKeeper payment on to Michelle, so she will receive $1,500 per fortnight before tax. During the application process, the art gallery will notify the ATO that Michelle receives the payment from them. The art gallery is also required to advise Michelle that she has been nominated to the ATO as an eligible employee to receive the payment. Now, the cafe is not eligible to receive the JobKeeper payment for Michelle because obviously the art gallery is the primary recipient. The income that Michelle receives from her job at the cafe does not change her entitlement to the JobKeeper payment she receives from the art gallery. So that's multiple employers. And then we've got an employee that's been made redundant after the 1st of March. So Miles worked as a permanent part-time personal trainer at a gym for 6 months and was made redundant on the 20th of March 20. Okay, so he fulfills that criteria of being on the books at 1st of March 20 with that particular employer. In response to the due to his length of service. In response to the announcement of the JobKeeper payment, the gym decides they want to re-engage Miles, so they are well placed to resume their operations once the coronavirus restrictions are lifted. After being made redundant, Miles has registered an intent to claim with Services Australia for access to the Job Seeker payment and the coronavirus supplement. Okay, so those are our current unemployment benefit packages that are being offered by the government during this period of crisis. Miles is single with no children, and in total he would be eligible to receive $1124.50 before tax per fortnight. So my own notes here, I can tell you that to get any benefits for unemployment for someone in his situation, single and no dependents, his income would need to be below approximately $1,100 per fortnight. So bearing that in mind, if Miles chooses to be rehired by the gym, under the JobKeeper payment, he'll receive $1,500 a fortnight before tax while he's stood down, and he'll need to advise service of his income, and he'll no longer be eligible for job seeker payment and the coronavirus supplement from Services Australia as a result of receiving the JobKeeper payment. Okay, so this shows how getting the JobKeeper will make a taxpayer in most cases become ineligible for unemployment benefits, as in this case, the $1,500 per fortnight is over his $1,100 income limit. All right, and finally, this one here with an employer with multiple employees. Sarah runs a landscaping company and employs 5 full-time gardeners. She's paying her employees $1,700 per fortnight before tax and expects her turnover will decline by more than 30% over the coming months, and that she will either need to lay off staff or reduce their wages significantly. As a result of JobKeeper, Sarah will be able to keep employing every gardener and only needs to pay an extra $200 cost per fortnight per employee, above that $1,500 per fortnight before tax JobKeeper payment. Okay, so my interpretation of this is obviously a great result for this landscaping business, and Sarah can hopefully, via accessing the other measures of the stimulus package and the bank concessions currently going around, which I'll go through tomorrow, continue to sustain her business during the coronavirus period and makes her business even better, okay, because she can actually focus more time on business strategy and training staff during this time. So that's the raw data pretty much on the JobKeeper payment. On the next page here, just going to bring this up. This here is I guess, a bit more detailed for if you're an employer, just to get a little bit more practicalities on what's involved. So I'm just going to emphasize a few things here, not everything. So this first bullet point, obviously we've spoken about this, register your intention on the ATO website now. And that's going to be really important. The second bullet point is provide information to the ATO on eligible employees. So this includes information on the number of eligible employees engaged at 1 March 20 and those currently employed by the business, including those that are stood down or rehired. And for most businesses, the ATO will use single touch payroll data to pre-populate the employee details for the business. Okay, so I spoke about the single touch payroll before. Third bullet point, ensure that each eligible employee receives at least $1,500 per fortnight before tax. So I've sort of gone into that already. The fourth one, notify all eligible employees that they are receiving the JobKeeper payment. And this one's a biggie too. You've got to continue to provide information to the ATO on a monthly basis. The details on the method, means of doing this will come out at some point, but we don't actually have that information just yet. Down the bottom here, just talking about eligible employees. This again just goes into a few more details. So it says here, first bullet point, they're currently employed by the eligible employer, including those stood down or rehired, were employed by the employer at 1 March, full-time, part-time or long-term casuals, which we spoke about before, at least 16 years of age. Okay, that's a big one, at least 16 years of age. And then we spoke about the Australian citizen requirements. Just note that employees who are not Australian citizens, they must notify the employers. Okay, that's important. And the final bullet point, they're not in receipt of a JobKeeper payment from another employer if they so that they can pay them the JobKeeper payment. And just a little bit more with the application process here. Just want to go to this point. Eligible employers will need to identify eligible employees for JobKeeper payments and must provide monthly updates to the ATO. And then just down this section here, businesses without employees, so the sole traders, just gives us a little bit more detail. So businesses without employees, such as the self-employed or sole traders, can register their interest in applying for JobKeeper payment via the ATO website from 30th of March. So they can do that now. So I've already spoken about that. And businesses without employees will need to provide a declaration as to their recent business activity. And I have said this before, the declarations will be available, I'm assuming, once this becomes law. People who are self-employed will need to provide a monthly update to the ATO to declare their continued eligibility for the payments. So I guess if your business starts recovering and what have you, they potentially will then take those payments off you. So yeah, monthly requirement to do that. Payment will be made monthly to the individual's bank account. And it's saying here that there are further details you can get. I haven't checked that out, but you can go to the ATO and see whether you can find those further details for the self-employed. All right, so this one here is a good example further, just to show another additional component. So we've got an employer with employees on different wages. All right, so Adam owns a real estate business with 2 employees. The business is still operating at this stage, but he expects the turnover will decline by more than 30%. So he's got Anne. She's a permanent full-time employee, and she's getting $3,000 per fortnight before tax. And she continues working for the business. And Nick, who's a permanent part-time employee on $1,000 a fortnight, and he also continues working for the business. So Adam's eligible to receive the JobKeeper payments for each employee. And here's the practical ramifications for each of them. So the business continues to pay Anne her full-time salary of $3,000 a fortnight, and the business will receive $1,500 a fortnight from the JobKeeper payment to subsidise the cost of Anne's salary, and they'll continue to pay super on her salary, which is the $3,000. So my notes here, so Adam, as the employer, he's going to receive that $1,500 job seeker payment, and it's not passed on to Anne. And for him, it's going to be taxable income to his business. And just note, obviously, there'd be no GST that you would have to remit on these payments from Adam's perspective. So if we just continue over here, for his employee Nick, what the ramifications are. So he pays Nick his $1,000 per fortnight before tax salary, and he gets an additional $500 per fortnight, so that he in total gets the $1,500 per fortnight before tax. The business receives $1,500 per fortnight before tax from the JobKeeper payment, which will subsidise the cost of Nick's salary. The business must continue to pay super guarantee on only the $1,000 per fortnight. Remember, we don't have to pay super on the JobKeeper payments, but it is optional if you ask me, feel free to do that now. You unmute your microphone before I move on to the next part of the package.
Hi, Kerry here.
Hi, it's Katrina. How are you doing?
Hi, Kerry.
Sorry.
Hi. I have Asian workers here. Right now I have 3 of them, and they're
Sure.
on their working holiday visas, and they
Yep.
get paid the same as an Australian would be paid. So am I able to look at their wages for this period and get the job seeker payment for them for while ever they're here? They're usually here. One's going to be here 6 months, or actually total of 9 months. She's doing 3 months, and then she's doing another 6 months. And the other 2 are just doing their 3.
That's it. It's all about the status of their visas. So whether that would be seen as a non-permanent visa or not, those working wouldn't be able to give it. The ramifications are for those particular visas. I would be maybe having a look on Fair Work, or speaking to someone at the Fair Work, or going onto their website, for example, and just having a look at what the status of their eligible for this or not.
Okay. And
it's all going to come down to the eligibility on the visas.
Yeah. Another question. So I missed at the beginning, but if I do a profit and loss for the months, comparing it to last year and this year, like we make fruit trees, so we've been selling well this past month, better than we were last year, but I don't know if that's going to continue. So
that's right.
Can we be in the category of I don't know? Maybe we will drop below 30,000.
That's right. So you might have noted in some of the examples I've been doing that a lot of them have been assessing that their income will drop by 30%. So what I'd be doing, I would definitely register your interest, okay, so that you're getting updates on the progress of the legislation. And by the time sort of everything's worked out, I mean, the first payment doesn't start till the 1st of May. You'll probably get a fair idea over the next couple of weeks whether your income has or will drop right off, and then you can start supplying the required information to them through their application process.
Right. And last question, do we have to pay this back?
No, not at all.
In the future, we don't have to, it's not like a loan that we have to pay.
It's not a loan. No, it's not a loan. Not a loan.
Never. Okay. Thank you.
No problems. Any other questions people wanted to verbally ask me before I move on to the next concession?
Yes. Hi, Anthony. It's Dashani. I just wanted to find out if wages above the 50, will they still be eligible for that JobKeeper?
I will confirm this for you because obviously those notes don't have anything about that. But I would say at this stage, you've probably got to pay out entitlements before you would actually get access to the job seeker. But what I might do is I'll get Karina, maybe just to note that down, and maybe you could just put your details into the chat box and your question as well, and we'll follow that up with you just to confirm that.
Okay, and can I also ask, should we be, like, for example, if our fortnightly payroll ends this Friday, should we be proactively topping up to the 1,500 threshold in anticipation of the JobKeeper payment, or because it's not really confirmed at this point? It's
not confirmed, that's right. So look, they're basically saying the options are there if you want to do it. If you're in a position to probably hold off.
But then we would be jeopardizing our JobKeeper payment for April potentially.
Not necessarily. I'm just sort of saying, just in case. I don't know your business's situation,
right.
But I would just be, just in case. Obviously, it doesn't go through the application. We're talking 1 month in arrears. So eventually, from a cash flow perspective, you are going to get that money if it's deemed to be, an eligible application. So I'd probably err on the side of just waiting until everything's sort of finalised, and maybe start from that pay cycle doing it.
Okay. All right. Thanks.
Okay. No problems.
Can I ask another question? Sorry, Kerry again.
Sure.
I have a son who works for us as a manager of this fruit tree nursery, but he's paid by contract, so it doesn't apply to him, does it?
So he's like a sole trader, is he?
Yeah, he pays by contract. I pay him, but he does his own tax.
Yeah. So does he do work for other people as well? Does he? Other employers?
No,
it's just mainly all through you. Okay. So yeah, look. Either way, I mean, that opens up other issues altogether. But either way, whether it's as a sole trader or whether it's as an employee type relationship, in his case, the way he's showing it would be as a sole trader. He could put through his own application to try and access the benefits if it can be shown that his turnover has reduced by more than 30% during the period.
Okay, yeah. So he's kept his builder's license, so he can go and work for other people, but he's most of the time here.
Okay.
Okay. All right. Thank you.
No problem.
Hi, it's Katrina Hutton speaking.
Yep. Hello, Katrina.
I have a question. It's a bit of a curly one. We had a guy, we've got a couple of staff, and we're in the construction industry. We have a guy working for us that came from Queensland. When they were going to shut the borders, he had to go home. He has family up there. Now we've had to hire somebody else, and that was after the 1st of March. How would that fit?
Yeah, so he was with you prior to the 1st of March?
Well, that guy was, but he's had to go home. But we've had to hire somebody else.
Yeah, okay. So that
they've been hired since the 1st of March to fill that gap.
Yeah, I see what you're saying. That's, again, I think you're probably going to have to maybe put that one into the chat box, and I think we're going to have to take that one up with the ATO, because that's one of those ones that sort of fit outside the square. Face of it, you'd have to say no for both of them, but there may be a provision to allow for that, because obviously there's special circumstances involved with that particular scenario, given the coronavirus has impacted your decision with how you've recruited your staff in that situation.
Yeah, well, I mean, he chose to go home, was his choice. However, they told people if they were going to go, you know what I mean?
Yes, that's right.
It was a government directive.
That's right. So there may be a carve out in the legislation for that sort of scenario. So as I said, if you could just write that in the chat box, and your details, and we'll follow that up for you.
I haven't quite. Where's the chat box?
If you hover over your screen.
Yep.
You'll see it looks like a page with little writing on it. Probably the third from the left, next to the little people icon.
Oh, yeah. Look, I think I found it, but if not, I'll send it to Tanya and get her to pass it on to you.
No problems. Yeah, no problems at all. So we'll chase that one up for you with the ATO.
Thank you.
Oh, this is
Okay,
Peter.
so as another question?
Yeah, this is Peter. Can you hear me?
Yep, I can hear you, Peter.
Sorry. They get very a week. Have a retail and my turnover is going to obviously drop by 30%.
Yep.
A couple of those, some weeks they earn more than the $750 a week.
Yep.
Other weeks they don't.
Mm-hmm.
My question is, they should all be eligible. That shouldn't be an
Yep.
issue. When do I need to start paying them the 50? Is 1.5, 12 for my payment.
That's right. That's why I'm saying you have the option if you want to start paying them now. But by all means, I would probably, if you've got cash flow issues, I would be waiting and probably till you get that first payment, and then I'd be distributing it out after that point in time. So there'd obviously be a top-up payment that you'd have to make for the first month, but you're always going to be a month behind because it's paid in arrears. So they are entitled from the 30th of March. Okay. So I guess it's just you've got to work out cash flow wise what's going to work best for you, because overall you're going to be better off by being a part of the scheme.
Sure. No, I think it's good from that point of view. Just
so
more
there's no stipulation that you have to start right now, but you can if you're in a position to.
Right. And my next question is then, if they're getting the $1,500,
yep.
Do I have to bring them into work?
No, you don't. No.
Okay.
No,
right.
That's you can do. As I said, you could spend time improving your business model. There's all sorts of things you could be doing. They will get that regardless of whether they're working or not.
Yep. Okay. Thank you.
Yep. No problems.
Anthony, it's Nicole.
Sure. I might just make this the last question as well, and we'll move on. If you have any other questions, just put them into the chat box. So yeah, go ahead, Nicole.
I've just got two questions. The first one was I've registered for a business, the interest for the JobKeeper payment.
Yep.
But when you're talking about where you're providing the information to the ATO about the number of employees and when they've started and stuff like that, I can't find that. Where do you go to do that?
That's not up yet. The only thing you will find at the moment is registering interest. All that stuff, I'm sure from probably next week, you'll start to find those sorts of things go up on the ATO website.
Okay, great. Thank you. And the other question was following on from Peter's scenario there.
Sure.
If you're not, if your cash flow is not allowing you at this point in time to pay that $1,500, what happens to your employees? Basically, they're going to have to go without anything for the month.
That's right. Yeah. They can always start the process with Centrelink, and once their first income comes in, they can inform Centrelink at that point in time, and then they'll go off Centrelink and onto the JobKeeper payment.
Oh, okay. So for the business that's in mind that I'm thinking of, it's a public school canteen. So the school's closed. The employees have been stood down, and the canteen can't afford to pay $1,500 a fortnight for them for a whole month until the payment would come in. But then the poor employees would have nothing. So they're probably best off to register for the JobSeeker payment then in the meantime.
Absolutely. Yep. JobSeeker unemployment benefits. They should get right onto that straight away to try and get that lodgement approved.
Great. Thank you very much.
No problems. Okay, as I said, if you've got any more questions, please can you just put that into the chat box, and I promise we'll chase that up and we'll get onto it for you. Now, as I want to move on to the cash flow assistance for businesses, got a lot to get through, so just going to bring that up now. Okay, so this is what we've been bombarded with probably over the last 2 weeks, I think, the boosting cash flow for employers. Now, this originally was announced on the 12th of March, and they enhanced it, pretty much doubled the benefits of it, or even more than doubled the benefits in some cases, about a week later. So allow me to go through this, and once again, the examples that I do will make it a lot more understandable once we go through the main data of the package. So they call it the cash flow assistance for businesses, boosting cash flow. So I'm going to call this part 1 of the cash flow assistance for business package. All right, so a bit of a summary. The government's providing up to $100,000 to eligible small and medium-sized businesses and not-for-profits. Okay, so that was one of the extra things they added in a week later, including charities that employ people with a minimum payment of $20,000. All right, so these totals, the 100,000 and the minimum of 20, these totals comprise part 1 and part 2 of the package. Okay, so I'll go through part 2 shortly. On the 12th of March 20, the government announced the boosting cash flow for employers measure, okay, part 1. And then going down a bit here, just bring this up, just here. The government enhanced the measure as part of the second economic response package, and now not-for-profits are included, including charities with an aggregated annual turnover under 50 million that employ workers. So that's in addition to our small and medium-sized businesses with their aggregated turnover under 50 million. So just here, under the enhanced scheme, sorry, I can just hear a bit of background there. If you could just mute your microphone there. Under the enhanced scheme, employers will receive a payment equal to 100%, okay, of their and wages withheld. And that's up from 50% from the first announcement they made. So when we're talking about wages withheld here, I've had a lot of people misunderstand this. It's only on the PAYG withholding component, not the actual wages. Okay, so it's not that generous that it's including wages in total. I guess that's where the JobKeeper payments come in, where they're obviously a lot more generous. So PAYG withholding, with the maximum payment being increased from 25,000 to 50,000 under the enhanced measures. And in addition, the minimum payment was increased from $2,000 to $10,000. Okay, so that's talking about part 1 of the package. Now, this is part 2 of the package here. So it says an additional payment is also being introduced in the July to October 20 period, and eligible entities will receive an additional payment equal to the total of all of the boosting cash flow for employers' payments that they have received. Okay, so what we're talking about there is they're going to receive the total of whatever they got in part 1 of the package. They're going to get that total for part 2 of the package. So it's basically a doubling up of what they have already received. So it means eligible entities will receive at least $20,000 and up to $100,000 under both payments. This additional payment continues cash flow support over a longer period, increasing confidence, helping employers to retain staff, and helping entities to keep operating. All right, big one here with this one, whereas the JobKeeper payments for employees and potentially employers is taxable, these payments when received by employers are tax-free, okay? You will not pay income tax if you're a business receiving these payments. And it's automatically calculated by the ATO. There are no new forms required. So all it basically requires is you lodging some BASs, which is good. So eligibility for the boosting cash flow for employer payments, or part 1 of the package. So I've been through the whole small and sized NFPs under 50 million already. These bullet points, very important. The payment will be delivered by the ATO as an automatic credit in the activity statement system, okay, where you lodge your BASs from the 28th of April 20 upon employers lodging their eligible upcoming activity statements. Employers that withhold tax to the ATO on their employees' salary and wages will receive a payment equal to 100% of the amount withheld, up to a maximum amount of 50,000. Okay, so 100% you'll get back of whatever you put down for PAYG withholding in most cases. Eligible employers that pay salary and wages will receive a minimum of $10,000, even if they are not required to withhold tax. Okay, for example, if you're paying casuals who don't earn up to the tax-free threshold and there's no withholding, you will still get something out of these measures. And again, my examples or the examples in the document will explain this a lot better. Okay, so up here. The payments will only be available to active eligible employers established prior to the 12th of March 20. So what does this mean? It means that your business must have shown some income, say in the 2019 tax return, or if there's no 19 tax return lodged, you would have to show at least some income in your activity statements starting from 1 July 18 through to the most recent activity statement lodge, which would be for a monthly lodger, the February business activity statement, or for a quarterly lodger would be the December 19 quarterly BAS. Okay, so you've got to have at least one taxable supply in one of those periods to show that you're eligible. So they do this because they want to stop, this is my notes now, they want to stop the deliberate contrived arrangement for accountants like us to set up entities to set up entities post the announcement date or post the 12th of March, purely just to get the payments. Okay, you've got to be an existing business as of that 12th of March 2020. All right, let's now, or part 2 of the package. So the entity must continue to be active. Okay, so that basically means a lot of people think that business has still actually got to be running. That's not what it means. It just means a similar thing to what I said before about part 1, is that you just have to have been existed and been active prior to the 12th of March 20. Okay, so it's the same criteria for the first and second payments. You've got to have existed and been active. I had some sales prior to the 12th of March 2020. Okay, so for our monthly activity statement lodges, it's going to be delivered as an automatic credit in the activity statement system, and it will be equal to a quarter of their total initial boosting cash flow for employer payments following lodgement of the June, July, August, and September 20 activity statements. And that's up to a maximum of 50,000. Again, probably a little bit confusing for some people to get that in their head, but I'm going to show you very shortly in an example how that works. For our quarterly lodges, the way that's going to be done is it'll be equal to half of their total initial boosting cash flow for employer payment, and that's following lodgement of their June and September activity statements. So basically, if you're eligible for this, you're going to get some form of assistance from this March BAS all the way through to your September 20 BAS. Okay, there's going to be some form of credit or some form of assistance you're going to get out of this. Okay, the timing. So I'll just bring that up. All right, so this is the timing for part 1 of the package, or the boosting cash flow for employer payments. So down here is the best way to look at it. For our quarterly lodges, you'll get it in your March and your June 20 BASs. And for your monthly lodges, there's this special payment. So you got March, April, May, and June. You'll get something, but they've got this proviso here to provide a similar treatment to quarterly lodges. The payment for monthly lodges will be calculated at 3 times or 300% of whatever you put in your March 20 activity statement. And that just recognises that for monthly lodges, they're only going to be putting in 1 month's worth of PAYG withholding in March, whereas our quarterly lodges, they'll be putting 3 months worth of PAYG withholding. So to overcome that, they're just going to give you 3 times whatever you put in March. And that's, I guess, is representing an average of what January and February would have been for PAYG withholding. So my example, again, will show that much clearer. All right, so let's go and have a look now at some of the examples, which are going to make this a lot clearer. All right, so first of all, we've got Sarah's construction business. Okay, so she owns and runs a building business in South Australia and employs 8 construction workers on an average full-time weekly earnings who earn $89,730 per year. She reports PAYG withholding of $15,008 for her employees on each monthly business activity statement. Okay, so this $15,008 is just representing the total PAYG withholding for all her 8 construction workers that she's putting through in each BAS, just to make it a simple example. To receive the payment on lodgement of her BAS, and this is how it's going to work. So I'll add a few of my comments as we go along. She's going to get a credit of $45,024 for the March BAS, and that's that we were talking about. So in her March BAS, her withholding is 15,008, and they will times that by 3, and that's the total payment or credit that she's going to get towards her BAS when she lodges her March monthly BAS. She'll get a further credit of 4,976 for the April BAS, because what's happened there, she's now reached her $50,000 cap, because when you add these two amounts together equals 50,000. Because she's already reached her cap, she gets nothing for May. Okay, she's already received all her Part 1 payments, and then in June, she's not going to get any more Part 1 payments because she's already got her 50,000. But in June, that's also the time when she starts receiving Part 2 of the package. Okay, that additional payment. And when you're a quarterly payer, basically what you're going to get is a quarter of whatever you've received under Part 1 in each of your next 4 BASs. So in the June BAS, the July BAS, the August and the September BAS, she'll get 12,500 credit in each of those BASs, so that in total, down here, she receives $100,000. Okay, so $50,000 from Part 1 and $50,000 from Part 2. So that shows someone getting the maximum amount. And remember what I said, that $100,000 is non-taxable income for Sarah's construction business. Okay, let's go to Sean's, let's go back there, Sean's hairdresser salon. So he owns a hairdresser salon on the Gold Coast, employs 12 hairdressers with an average salary of $50,000 a year. And he reports withholding of 8,788 in total for all his employees on a monthly BAS. All right, so let's go and have a look at the summary for him. So he's getting 26,364 in his March BAS, again, which is equal to that 300% or 3 times the withholding he puts through for the BAS. So 8,788 times 3. He gets another 878 in April, another 8,788 in May because he hasn't reached his 50,000 cap yet. And then he only gets 6,060 in order for the total of those 4 payments to get him to his cap of $50,000. That now ends Part 1 of the package for him. He's got his 50,000. There it is there. He'll also receive an additional payment of 12,500 for the June period, equaling the 25% of his total boosting cash flow for employer payments. So it's similar to the other one, and he just gets that over his next 4 monthly BASs right up until the September BAS. So that in total, once again, he's getting 100,000, 50,000 from Part 1 and 50,000 from Part 2. Tim's courier run. This one's a little bit different. So he owns and runs a small paper delivery business in Melbourne and employs 2 casual employees. Sorry, I've just got someone there with their microphone unmuted. If you could just mute your microphone, that would be great. So he's got 2 casual employees who earn $10,000 per year, and he does a quarterly BAS. Okay, so this is different. The other 2 are monthly BASs, and his withholding is 0. Okay, he's got PAYG withholding of 0 for these employees because they're under the tax-free threshold. Okay, so under the government changes, Tim will still be eligible to receive payment on lodgement of his BAS. So Tim's going to be eligible for those minimum payments we spoke about, $20,000 in total. So he'll get a credit on his BAS of $10,000 for the March quarter as he pays salary and wages, but it's not required to withhold tax. And then in his June BAS, he's already been paid his maximum for Part 1 of the package, which is the $10,000 minimum payment. And then he'll get another $10,000 by way of 50% in his June BAS and 50% in his September BAS. So that in total, he's getting $20,000, $10,000 under Part 1 of the package and $10,000 under Part 2 of the package. So that's the examples that I wanted to go through for this particular measure. Before I go on to the supporting apprentices and trainees, I'm just going to stop here now to see if anyone has any questions. So feel free to ask me now if you have a question on this.
Yeah. What about if you restructure, say on the 1st of April, go from a sole trader to a company with the same business?
Yeah, the eligibility, is that you, Max?
Yes, it is.
Yeah. Max, the eligibility, if we go back to, I'll just go back here. Okay, so just down here. So it's this bit here. Okay, so what we're talking about here is basically the business itself. From what I've read, there's nothing to say about if you change the type of tax structures that's going to be an issue. Really, it comes down to this aggregated annual turnover, okay, of being under $50 million and having some sort of active business at that point in time on the 12th of March. So I probably might get you maybe to put something into the chat box, and I might confirm that. But personally, I haven't read anything that would preclude that sort of scenario from still accessing the measure. So I'll look into that further for you, Max.
Okay, thank you.
Yeah, if you could just put that into the chat box as a reminder for us, that question, that would be great. Is there any other questions on this one before I move on to the supporting apprentices?
Yes, I've got.
Kerry here.
Yeah.
That last example you gave of employees the employer not having to withhold any tax.
Zero withholding, yep.
Yeah. So
Tim's career one?
Yeah, if the company gets a credit of $10,000, then how do they ever use that $10,000 if they never have to pay any tax?
Yeah, sure. So what this gets applied to what they call the integrated client account. Okay, so the integrated client account with the ATO not only has PAYG withholding, but it also has GST and also has PAYG installments that go through there as well. So what it will do, you probably won't see the credit when you lodge the BAS, but when you go to your actual account with the ATO, the activity statement account, it will just be applied as a credit to that account, similar to like your bank account. So it will reduce any potential GST liability, for example, that you might have from the BASs. Does that make sense? Yeah. And if it produces a net refund overall, you will be given that net refund into your bank account.
I see. All right. Yeah. Thank you.
So it's done through the activity statement system.
Okay. Thank you.
Yep.
Yes, I've got a question. If you can hear me.
Yep.
So I'm just trying to get this clear. So the amount that you pay as you go withholding, if you're putting $10,000 for your March quarter,
and
you still have to pay that.
What sort of lodgement are you, monthly or quarterly?
Quarterly. So for March quarter.
Yep.
So your $10,000 pay as you go withholding, you still need to pay that BAS as normal.
What you should do, obviously you'll have other liabilities, GST or whatever it might be. So you put it through.
Yep.
And it will come through whatever it might be, the net amount, whether it's a refund or whether it's a payable, whatever. It's all about, like I said before, your integrated client account. So you're gonna have to refer to your integrated client account through your online access. Hopefully you have online access to your ATO account. So I'd be lodging that. And then what I'm foreseeing, there's not enough details on here, but what I'm foreseeing is they'll then apply a credit to your integrated client account, and you would pay or you would get a refund for whatever the net difference is.
Okay, but you still actually are paying your pay-as-you-go debt.
No, effectively you're not paying your PAYG debt because you're getting 100% of that back.
Yes, but that's what I'm saying. It's really just no cash flow injection as such. They're just paying a bill for you. So there's no cash injection to keep your doors open and pay your electricity and your phone and computer costs, etc. There's nothing like that for the employer.
Well, I guess you can look at it as from the perspective of it's a cash outlay you don't have to give.
Yeah, but there's nothing else available to keep your door open.
Under this measure, as I said, essentially it's just a credit. Yep.
Yeah. Okay.
That's right. So, but I will go through other measures tomorrow, particularly regarding the financing measures that are very, very good to try and keep your business up and running. And in addition, with the JobKeeper that we just went through before, is going to be a very good cash injection for businesses.
Yeah, well, it's not really. The JobKeeper is to keep you personally, like your home, your own personal expenses, not necessarily your business. Because as a sole trader, you've got both your business and your personal life to try and keep in order.
Are you a sole trader? Are you?
Yes.
Yeah. So as a sole trader, you personally can get those payments if you meet the criteria for JobKeeper. You can get that $1,500 a fortnight.
Yes, that's right. So that would be for your trying to keep yourself living, nothing to do with what you're trying to do for your business.
I guess it all depends on each business's cash flow. Yeah.
Right. Okay. Thank you.
Okay. But do listen tomorrow about there's very generous financing options going on at the moment as well in regards to what the banks are offering and what the government's offering. So I do encourage you to listen tomorrow to that part of the program. I'll just take one more question.
Yeah.
Hi there.
It's Deshani here. Sorry. Just got a question. If you're a monthly reporter and you've had your turnover has reduced significantly in March, and as a result of that, you've actually pared back your wages significantly. Does that mean you'll be disadvantaged because only a 300% is applied to the March withholdings, and the March withholdings wouldn't be representative of January and February?
That's right. Yeah, unfortunately, I don't know why they didn't just include what was actually in January and February, but that's what they're doing. They're just timesing it by 3. So I'm really sorry about that.
So monthly reporters will actually be disadvantaged in that term.
Yeah, in terms of if there's not a lot of activity, not a lot of actual payments that have gone out with PAYG withholding, then you're right. It will be because you're getting that average of using March as your average base rate. Yeah, that's right.
Right, and there's no avenue to appeal that or anything like that through the ATO?
No, that's set in concrete.
Okay, and just another question. In terms of the timing of the submissions of your BAS and stuff, so my understanding is that the money doesn't, or the credit doesn't hit the accounts till very late in April.
That's right.
Is that 28th of April?
Yep, sure. So what they've said is the credits will be applied the later of when you lodge or the due date of lodgement. Okay, so if you went and lodged it today, the ATO has given themselves enough time to make that so it's the 28th of April, for example, for your quarterly lodges, that they can make that credit come to the account. So, that's another bit of an issue, I guess, in terms of they're allowed to delay that credit to the account.
Right. So we then don't have to make the actual physical payment.
Yeah, I wouldn't. No, I would not.
Going to hit on the 28th.
That's right. I definitely would not make the payment. I would wait for the credit to hit before you make any payment.
Right. Okay.
Particularly at the moment with the bushfires and the coronavirus and what have you. There's a lot of concessions going on at the moment in terms of making your payments for your BAS. So, I would definitely wait for the credit to go through.
But is there an official kind of extension on submissions and things like that?
For the March BAS, look, you've got until the 28th at least anyway to make the payment. So I wouldn't be rushing into making a payment. So you should see the credit before there's any issues with it going too late, if you know what I mean.
Right. Okay, it's just in terms of submitting for the JobKeeper, it's better to submit earlier?
Yeah, I would submit earlier because it's in, you know what I mean? You're in the queue, if you know what I mean. So I would definitely, obviously, make sure the BAS is accurate and what have you. But the earlier you get in, the more earlier you'll get that credit come through.
And just hold off on the payment.
I would hold off on the payment up to at least the 28th, and possibly even longer. I'm sure you'll be fine.
Okay, fantastic. Thanks.
Okay. All right, I might just move on to again, if you have any more questions on that one, please put it into our chat box and we'll chase that up for you. So I just want to move on to the apprentices, trainees and apprentices concessions. So this one here. So this is another really good one. Now, your accountant doesn't directly deal with this one for you, okay? You've got to do a lot of the legwork on this one, but I will go through it anyway because this is a really important part of the package. And for those accountants listening, we need to be mindful of this if our clients are ringing up about this concession. So just give me one sec. I'll just go to my notes on it. So summary, the government is supporting small business to retain their apprentices and trainees. Okay, eligible employers can apply for a wage subsidy of 50% of the apprentices or trainees' wage paid during the 9 months from 1 January 20 to 30 September 20. Okay, 1 January 20 to 30 September 20. Where a small business is not able to retain an apprentice, the subsidy will be available to the new employer. Okay, so just note this is, but eligible as well. I do emphasize the word eligible trainees. I'll come to eligibility in a moment. So this, for example, could be your white collar workers, e.g. an office administration trainee, for example. So keep that in mind. It's not just your blue collar type workers, you know, in construction, plumbers, that sort of thing. It's these white collar workers as well. Employers will be reimbursed up to a maximum of $21,000 per eligible apprentice or trainee, and that corresponds to $7,000 per quarter. So my notes on this, this is quite generous compared with the boost in cash flow for employer payments, and we're also talking about gross wages here, not PAYG withholding. Okay, so 50% of gross wages. And again, my example that I'll go through will show that, and applies per employee. Let's go down to eligibility here. I'll bring that up. So here, the subsidy will be available to small business employing fewer than 20 full-time employees who retain an apprentice or trainee. The apprentice or trainee must have been in training with a small business as at 1st of March 20. Okay, so if you employ someone, an apprentice or trainee after 1st of March 20, you are not eligible. They have to be with you at 1 March 20. So again, this is an integrity measure. Okay, so that people you know, can't put these. I mean, who's going to put someone on anyway at this point in time? But if you do put someone on just to get access to these measures, then you won't be able to do it. Employers of any size and group trainee organisation that re-engage an eligible out-of-trade apprentice or trainee will be eligible for the subsidy. Okay, so this, my notes here, this is regardless of if they are a larger employer, e.g. they employ more than 20 employees. Okay, so if you've got an initial employer that, you know, has less than 20 full-time employers and they go out of business and can't afford to pay that apprentice anymore, then if someone else picks up that apprentice or trainee and they're a larger employer, say 30 full-time staff, they can then be part of the measures. Timing. Employers can register for the subsidy from early April 20. Final claims for payment must be lodged by 31 December 20. So my assumption with this is that payments for the period 1 January to 31 March will start to flow through in April sometime, if employers get onto this rego early. Okay, so get onto it right now. I've got a couple of websites you can refer to if you want more information. And I guess this is the biggie here. For further information on how to apply for the subsidy, including information on eligibility, contact an Australian Apprenticeship Support Network provider. All right, so it's up to the employer to go and do the groundwork on this and be in touch with their support network. So nothing to do with your accountant in accessing this particular measure. So let's look at, let's go back up, David's Plumbing. So David's Plumbing is a small business that including 2 full-time Australian apprentices. Okay, so employs 10 people, so he's under that 20-person eligibility criteria. So we go over the page. So he's got Taylor, who's a first-year apprentice, age 20, doing a Cert 3 qualification, and she commenced her apprenticeship with David's Plumbing on the 6th of February 20. Okay, so she therefore is eligible because she was employed before the 1 March 20 date that we spoke about before. Taylor receives a weekly wage of $532.89. Lisa is a 3rd-year Australian apprentice, aged 29, and undertakes a Cert 4 qualification. And she commenced her apprenticeship with David's Plumbing on 18 November 17 and receives a weekly wage of $772.71. So once again here, eligible because was employed prior to 1 March 2020. So David's Plumbing, as we said before, is eligible for these measures, and he will be paid 50% of the apprentice's wages that have been paid by David's Plumbing since 1 January 20. And here's the calculations. He'll get a $9,059 subsidy for employing Taylor for the 6th of February to the 30th of September. Remembering 6th of February was when Taylor started. Okay, and this $9,059 is simply 34 weeks employed times $589 times the 50% subsidy. And he'll get $15,068 for employing Lisa for the full 9 months, 1 January 20 to 30 September 20. Remembering that she was with him from 18 November 17, so she gets the full 9-month period. Okay, so this 15,068 is simply 39 weeks times 772.71 times 50% subsidy. Any questions on this one at all? Pretty straightforward, really. So feel free to unmute your mic if you have a question for me on this particular measure. If not, I will move on to the final measures. Okay, I'll move on then. So just a couple of pages here. All right, so the final measure I want to go through is what they call delivering support for business investment. Okay, so the government is backing business to invest to help the economy withstand and recover from the economic impact of coronavirus. So from my notes here, from a cash flow perspective, you'll see the benefits of these measures when your 2020 tax returns are lodged. Okay, well, particularly for the first one I'm going to go through, the instant asset write-off, and potentially another tax return for the temporary business allowance. So I'll go through both of them now. Okay, so the first measure under these particular provisions is increasing the instant asset write-off. So summary, increasing the instant asset write-off threshold from $30,000 to $150,000. So that's GST exclusive for our GST registered business and GST inclusive for our businesses not registered for GST. And expanding access to include all businesses with an aggregated annual turnover of less than $500 million, which is up from 50 million, until the 30th of June 20. So we don't have a long period to access this one. It's only until 30 June 20. And obviously all of you are pretty much going to be eligible for this because it's $500 million of turnover. Now the threshold. So cash flow benefits for businesses will be able to in that they will be able to immediately deduct purchases of eligible assets, each costing, so each, note that, each asset costing less than $150,000. The threshold applies on a per asset basis. So eligible businesses can immediately write off multiple assets. Okay, so obviously we would do this rather than claim the amounts as depreciation over several years. Okay. So in this case, we can claim it all in one hit if the asset is under the 150,000. '30th of June. And for this one, it's for or second-hand assets. Okay, note that because the next one I'm going to go through is only for new assets. This one is for new or second-hand assets. First used or installed ready for use in this time frame. So a little caution, a little example I'm going to give you. The asset must be first used or installed ready for use prior to 30th of June 20. So say a primary producer purchases a $50,000 tractor and it's ordered on the 28th of June 2020 and not delivered to the farm until the 15th of July 20, then they would not be eligible, okay? Because it's not installed ready for use and not delivered by 30th of June. So don't be fooled there, thinking that you can get access to this if you haven't actually received the asset or started using it. Okay, so if there's any businesses still in a position to outlay capital costs, they should do this ASAP in order to meet the timeframes. Also note, this measure applies to equipment financed. Okay, so from a cash flow perspective, if the finance is structured correctly, potentially the business can claim the GST up front, So in my example, it's a $50,000 asset, GST exclusive. Okay, so they could get $5,000 up front back in their BAS for the GST, and now they could then pay off the equipment finance, say, over 5 years. Okay, so from a cash flow perspective, this may actually be not too bad if you've got some extra funds still lying around, because you'll then get the big tax deduction. So let's look at an example. Okay, so just the example one I'm going to look at. Owen owns a company, On Point Farms Proprietary Limited, through which he operates a farming business in central wheat belt of Western Australia. On Point Farms Proprietary Limited has an aggregated annual turnover of 25 million, okay, so well under the 500 million for the 1920 income year. On 1 May 20, he purchased a second-hand tractor for $140,000, exclusive of GST, for use in his business. Under existing tax arrangements, On Point Farms is not able to immediately deduct assets costing more than $30,000, and instead would depreciate the tractor using an effective. So my notes here, what that means is he would claim the depreciation over a 12-year period. Choosing to use diminishing value method, On Farm Proprietary Limited would claim a tax deduction of $3,800. Now, under 150,000 provisions, On Point Farms would instead claim an immediate deduction of $140,000 for the purchase of the tractor in the 1920 income year, and this equates to $136,101 more than under those existing arrangements. At a company tax rate of 27.5%, Owen will pay $37,000 approximately less tax in the 1920 financial year. So this will improve On Point Farms' cash flow and help his business withstand and recover from the economic impact of coronavirus. Okay, so any questions on this particular measure before I move on to the final measure that I'm going through today? Once again, feel free just to unmute your mic if you have a question. All right, so the final measure I want to speak about today is backing business investment incentive. And before I do, this measure here will also see the full cash flow benefits flow through once the 1920 business tax returns are lodged. And just looking at the summary, it's a time-limited 15-month investment incentive to support business investment and economic growth over the short term by accelerating depreciation deductions. The key features, so the benefit, you get a deduction of 50% of the cost of an eligible asset on installation, with existing depreciation rules applying to the balance of the asset's cost. An eligible business is a business with an aggregated turnover below 500 million. So that's like our $150,000 instant asset write-off provisions. And eligible assets. So note this one, this is only on new assets. Okay, the $150,000 provision is for new and second hand under Division 40 normal effective life, and acquired after the announcement date. So the announcement date was ready for use by 2021. So remembering the $150,000 instant asset provision, you had to have it done by 30 June 2020. You get an extra 12 months for this one. And just a note here, it doesn't apply to second-hand assets, as I said before, buildings and other capital works depreciable under Div 43. So what we're talking about there is doesn't apply to any structural improvements like purchasing buildings, making improvements to buildings, that sort of thing, etc. Okay, so small example down the bottom here, and then we'll be finished today. So example 4, we've got Joan and Bruce own a company, NC Transport Solutions, through which they operate a haulage business on the north coast of New South Wales. NC Transport has an aggregated turnover of 8 million. Okay, so they're well under that 500 million threshold for the 1920 income year. On 1 May 20, Joan and Bruce purchased a new truck for $260,000, exclusive of GST, for use in their business. Under existing tax arrangements, NC Transport would depreciate the truck using their small business simplified depreciation pool. I won't go into all that, but it doesn't matter. It's not relevant for example. Under the pooling rules, NC Transport Solutions, bring this up, would deduct 15% of the asset's value upon entry to the pool, which under ordinary rules, they get a tax deduction of $39,000 for 1920. Okay, so that's front deduct 50% of the truck's value, e.g. $130,000, before placing the asset in their small business pool. Joan and Bruce would then claim a further 15% deduction on the depreciated value of the truck, which equals $19,500. Okay, so that's basically just 15% of the other $130,000. As a result of the two deductions, Joan and Bruce are able to claim a total deduction of $149,500 in 1920, and that's $110,500 more than under the existing arrangements. And at their company tax rate of 27.5%, they will pay approximately $30,000 less tax in the 1920 income year. And this will improve NC Transport's cash flow and help Joan and Bruce's business withstand and recover from the economic impact of the coronavirus. Okay, any questions on this before we finish off today? All right, fantastic. So that is the end of our session today. A reminder that this webinar has been recorded, okay, and I will ensure that a link to the recording will be posted on our website in the coming days where you entered the webinar, the link where you entered the webinar from our website. In addition, please also join me for webinar 2 tomorrow, Friday the 3rd of April at 11:30 a.m. once again, where I'll discuss the support for individuals and households and also the available financing options and concessions existing at the moment for businesses and individuals. If you do have any other questions you think of, you might feel free just to post them in the chat box and we will get back to you. If not now, at some point soon. Karina will continue to monitor the chat box for a while. Thank you, and hopefully we will all see you tomorrow at 11:30 a.m.
Thanks, Anthony.
I think I have to do it here.
Anthony, are you still there?
I am, yes.
Can I just ask a quick